Okay, good morning and welcome, you beautiful human beings. Now, I know it says dollars for lunch. It's going to be dollars for lunch in a second. So just excuse that. Just from wherever in the world you are joining us, massive, massive welcome. Now, I know we've been super busy on the copy trade. That has been our main focus. It will still be our main focus over the coming weeks, but we will get back into some of our live sessions. Now, there's a free session across the board for our whole community to watch live or watch after the fact, whichever which way it is up to you. The purpose of this is to break down what is happening this week. What do you need to know as a trader, and specifically what is happening today? Because it's big, it's massive, and it's really the turning point for where we see a lot of factors in the markets, a pivotal zone. So if you're in the markets right now, you're starting to trade, there's never been a better time, right? You're about to see a seasonal shift, which happens very, very rarely, right? So just a massive shout out. I can see Nashil, Garwin's in the house, Tapelo, and Petunia is in the house all the way from Alexandra. Please let us know where in the world you are joining us from, right? Again, we love the hype. We love it when you guys bring that energy, and that's what it is all about. So bring that energy, shout it out. We love it. Put it in the comments. Love the chat. We're here with you all day. So let's break it down. What is happening in the world? What's happening in the markets? So the first thing you need to understand is that if you look at markets across the board, right, specifically things like gold, you'll see that we're in a seasonal shift, if I can call it that, right? So I'm going to share my screen with you, and most of you that know where gold is and where it's been for the last little bit, I'm just going to edit that there quickly, right? Let's just shimmy that over there. There we go. It's been a while since we've done a live, so a few things are moved around here. But I just want you guys to see this really quickly, right? So if we go back to a daily time frame on gold, right, you'll know that, and even a weekly is going to be a really good case study. So you'll see that we've hit these 1, 2, 3, 4 tops, right? Now, if you go back to some of the previous shows we've done, and specifically, you know, when we spoke about the recession, we spoke about interest rates announcements, things like that. What we've seen over time is that when interest rates are increased, right? So we, you know, just a quick background, we had the pandemic that hit, right? The whole world freaked out. The US specifically started stimulus programs, started stimulus checks. They started dropping interest rates to help the average person on the street, the average person, business owners across the board, dropped interest rates to make cheap credit more readily available. The stimulus checks, quantitative easing, they're printing money. The Federal Reserve was buying stocks and just, you know, pumping the economy with financial activity to stimulate, to artificially stimulate the economy in a time where people are at home, right? Businesses were pretty much not working at that point. So that's what happens. And the result of that, when we see things like that happen, interest rates drop, all these other things happen, right? The dollar ends up taking a knock, right? Their lower interest rates make it easily accessible. The dollar's not as attractive an investment destination because interest rates are lower, right? If you invest in the dollar, you're going to get a lower yield on your money, government-backed security as well as just cash in the bank. So that's what happened. Then as the pandemic progressed, things got a bit better. The US economy did a lot better than what people predicted, and they slowly started to raise interest rates. And that's what we saw over 2022. 2023 was really, you know, that rise of interest rates. And as they raised interest rates, right, we start to see that the US dollar starts to gain a bunch of strength. Why? Because when they raise interest rates to slow the economy down, because now you've got this red hot economy, they want to cool inflation. When they start rising interest rates, making credit harder to access because they're trying to avoid inflation, when they raise those interest rates, the dollar becomes a very attractive place. So we saw that over the space of 2022, 2023, the dollar dominated across the board. If we look at Wall Street, right, if we just quickly have a flick on US 30 here behind me, and we just zoom out on even a weekly time frame, right, that period over there was 2022, right, when interest rates started to rise, right? US 30 took a massive knock. Same thing for NASDAQ, same thing for gold, etc. Now, once they've raised interest rates to a point, right, to curb inflation, because they're fighting inflation, they'll then reach a point where they don't want to strangle the economy too much. They don't want to make acquiring credit too difficult, because that's where you force an economy into recession. So now where we are at this point in time, last year, sort of end of last year, fourth quarter, the Federal Reserve discussed pausing interest rate, pausing those hikes, meaning they've got to a point and they're not going to pause it. And that caused the whole market to get very, very excited, because we know that on the other side of pausing, just on the other side of that is rate cuts, right? And that's what the market is most excited about, because again, if you cut rates, it means a weaker dollar, and things like gold, things like indices, these start to rally. These start to really become an attractive place for investors, because these safe government-backed securities, bonds and yields, those start to drop in value, or they have less yields with lower interest rates. So Wall Street, stock markets, indices, commodities, these start to become much more attractive opportunities. So where are we now, and why am I telling you all this? Right? We learned that in the January Fed meeting with Papa Powell, that he said, hey, listen, everything's working kind of the way we want to. And there's different means that they have, financial tools they have to curb and slow down the economy. And they've deployed most of them. And they're starting to see inflation start to tick down. Now, there's basically, three things that they look at, right? They look at the employment data. So when we talk about non-farm payrolls, they look at that employment data. How hot is the labor market? And they need to, essentially, unemployment needs to go up, right, in the US to sort of get back to normal, which sounds counterintuitive, but it's correct. So they need the labor market to cool off a little bit. It was a very red hot labor market. People were choosing where they want to work willy-nilly because there's just so much work available, not enough people to do the work. They needed that to cool. Then we have CPI, which you guys are aware of, consumer price index, consumer price inflationary numbers. They needed CPI to start coming down. And overall, we've seen CPI start to come down. We've had some red hot numbers overall, but we've seen CPI come down. So the January Fed meeting, the Fed said, hey, listen, we're pausing interest rates. We're still keeping it paused. And, the next big question that everybody had and what the Fed had to answer is, right, if you're pausing, when do you think we're going to get an interest rate reduction? The first interest rate reduction is going to be a very big thing for the markets. And they said, hey, listen, March is unlikely. It seems a bit too soon, right? There's far more risk at reducing too early than there is in holding out for a little bit longer. So you'll hear this term higher for longer. It starts to repeat itself quite a bit in the Fed. So higher for longer is essentially the safer route. But after the March meeting, we should have a very clear indication of when these interest rates are going to drop. Now, the one pivotal thing that the Fed gives us in these meetings is they give us a dot or plot chart. And this is where the members of the Federal Reserve, the committee, they vote and they kind of put a little mark on a piece of paper saying, by these dates, this is where they think the overall interest rate should be. And that gives us as traders, investors, Wall Street bankers across the world, gives people an indication of what the Fed is thinking, where there's a sort of a likelihood or a gathering of opinion over when this is going to be. Now, we've already been told that interest rates are not going to be risen in March. We've already been told that. The Fed has downplayed that. Initially in December, there was a lot of speculation, up to 80% of analysts believe that there will be a March interest rate reduction. The Fed in January basically dismissed that very, very quickly and said, hey, the likelihood of this happening is not very high, so just dismiss that. So already know the Fed has dismissed it. So interest rate pause for today, right? And the reason I'm speaking about all this is obviously due to the fact that Wednesday and being today, we have one of the biggest fundamental data releases that we basically have ever, right? And I'll show you guys this quickly behind me. We have the interest rate decision at 8 p.m. this evening, right? We have the FOMC statement that comes out, and then we have the press conference, which is live, where Powell comes through, discusses, and talks about, what the Fed has done. And there's some questions and answers, and this is extreme volatility for traders. Now, the reason I'm speaking about this is that the Fed will then give us an indication of when this is going to be an interest rate reduction. Now, I believe that no matter what the Fed says today, and again, this is my personal opinion, it's not financial advice, everything we do is for education and entertainment purposes, but in my personal opinion, what I think is going to happen this evening is that the markets, remember, the markets don't price in the data today. If we look at high impact news events, and this is the reason why I tell you guys and I teach, ignore the hype, ignore these Instagram traders trading NFP, CPI to blow your accounts, ignore that BS. The reality is, that'll cause volatility, sure, but price action will remain king. The long-term plan will still play out. Now, I believe, in my personal opinion, that no matter what the Fed says this afternoon, unless it's something of a bombshell, something completely left or right wing that comes out of nowhere, I believe that the market has already priced in the fact that interest rates are going to stay flat, but the Fed is going to have to release some information over when the interest rate reductions may start. And if they indicate that that will happen in the next quarter, meaning in the next 3 months, I'm telling you, we're going to see markets rally like we've never seen it before, because that's all the markets are waiting for. That's all that big money investors, smart money, is waiting for, that key, for that whistle, for that sign to say, hey, listen, interest rates are as high as they're going to be. We already know that. But at this point here is a good time to get out of your government-backed securities, your safe securities, your high interest rate yielding securities, and move it into Wall Street, into slightly more riskier places. So the second the Fed indicates that, hey, it may be June, it may be July, whatever the case may be, if they indicate that in today's meeting, I think we're going to see markets rally like we've never seen before. Now, regardless of if they give an indication or not, and I think they're going to be pressed to do that, I still think markets are going to take this as a positive for today. Now, what does that mean for us as traders? Quite a lot, right? Quite a lot. So if we have a look at where markets currently sitting, and I'm going to focus on gold for a second, I'm going to go to, we've seen obviously on the weekly, we've made those 4 tops over there, right? We've made these 4 highs. We've beaten that high. We've punched through that high, right? So we've got these 4 highs that we see there. We've punched through that, decimated that. We're at this little zone over there, and I'm going to focus on that, and I'm going to zoom in. So just remember, we've got the spike up here. We've got a little bit of what looks like a bit of a pennant / flag, but I'm going to break that down for you, right? So that's what it looks like on a daily, and this is what it looks like on a 4-hour, right? So we've got this massive strength with this massive punch of volume in here, and we've got markets kind of sitting here. Now, this is a key value area, right? For a couple reasons. We've got some really good diagonal resistance here, right? We've got price going into supply and demand zones. We're seeing imbalances in liquidity, prices coming up into those imbalances, punching through them, utilizing previous support. So we're seeing really good price action, good market structure. This is on a 4-hour time frame. Now, we had a few questions last night. We did a beginner session over, questions and answers, and what do you do if you've got a small account, so on and so forth. But one of the things that we covered, people asking, why do we trade gold so much? And this is partly the reason, right? It really trends extremely well. So we've already got a high that occurred already on yesterday, right? That high from 1 a.m., right? We got stopped out of a trade here. Unfortunately, our prediction was to sell off. We got stopped out of a trade early there. We already got that high from yesterday, 1 a.m. in the morning. We've got the high pretty much for today at 5 a.m. And these 2 zones are going to represent massive buy opportunities should, right, the Fed stimulate investors back towards commodities, back towards an exciting market that sees a weaker dollar long term. Right? From a US 30 perspective, from a NASDAQ perspective, exactly the same thing. We've got good price action on all of these instruments across the board, right? So if you guys have a look at US 30, right, we bought US 30 yesterday afternoon. US 30 absolutely rallied, right? US 30, if you're part of Premium Plus, US 30 end rally was, it continued on for about 4,000 pips, right? Absolutely monstered through all of these levels. But there's a very clear structure that we're seeing on US 30, right? We're seeing a very clear sign that we've got a good amount of bulls in this market. There's a good amount of buyers in this market. The sellers aren't necessarily all there, right? We're not seeing those lower lows, right? We're seeing sellers really struggle. And what we're starting to see here is a triangle formation, right? So a bullish triangle, essentially showing us that there's more buyers than sellers. And I do believe that should we get that Fed even slightly dovish, right? So when we talk about hawkish versus dovish, hawkish is a Fed that comes in, super, talons out, inflation is bad, we'll do whatever it takes, and it's important, our job is important, and we will keep it high for longer. So if Papa Powell comes in extremely aggressive, nails out, that's generally a good thing for the dollar and bad for indices, bad for stock market, bad for commodities. So we see sell-off in those cases. I don't think we're going to see a Powell in that light today. I think we're going to see a dovish Powell. We're starting to see a very dovish Powell over pretty much the last 2 quarters. And should we continue to see a dovish Powell saying, hey, the things we're doing are kind of working, inflation is coming down, not coming down as fast as we want, but it is coming down, all these things. And then if there's even a glimmer of, hey, the plot chart, whatever you want to call it, if that indicates that the first rate cut may happen in May or June, I'm telling you, we're going to see markets absolutely eat that up. And the reason I say that, and you may ask, but Dane, how can you say that? How can you have that personal opinion? The reality is, in December, right, the Fed produced a dot plot or plot chart. Can someone please tell me what it is? I'm not 100% sure. They produced a plot chart, dot plots, whatever, in December that showed March may have the first rate reduction, and markets took off, right? We hadn't yet even had that solidifying evidence. They just said, hey, some members voted that there should be a rate reduction in March, or that's likely to happen. And markets just took that and ate it up. Indices went through the roof. You guys remember December was a monster month for indices. So the fact that we've had the March dismissed, that's dismissed. They said, hey, March will be too early. They're now forced to reveal their hand. Okay, if that was too early, when will be the correct or the appropriate time for rate reductions? If we get that, and we have a look here behind us, we are very, very likely to blow out some highs here on the US 30 as well as NASDAQ across the board. So we're looking at getting very bullish. Now, the reason why it's important to catch these things early, and the reason why it's going to be so beneficial to be in these markets early, is as traders, we speculate, right? We buy and we sell as things move. However, there is one place you do want to be, right? As history has shown, if we go back to a weekly time frame, there's one market you do want to be bullish in, right? There's one market that outperforms every other, right? And between the US 100, otherwise known as NASDAQ, between the US 30, otherwise known as the Dow Jones, or the S&P 500, these markets do not fail. They've beaten recessions. They've beaten rise and falls of, wars and all these other things. This is a place you want to be bullish in as an investment grade or investment type opportunity, right? So we want to get in some massive longs here. We want to hold these trades for a period of time. And I think this is going to be very, very exciting. Now, remember, if you're not a Premium Plus client, you're not going to see these trades. These are Premium Plus only trades. So the team is going to be looking at the nuances of what is happening in the market today. We're going to send out some trades. We had a good day yesterday. We're going to continue that rally today. And prior to Powell's decision, we're going to try and get in some trades. We may get into some trades after Powell's decision. So we're going to be trading pretty late, all the way up to potentially 8, 9, 10 o'clock this evening. And that, because it's an indice trade, it's going to go straight to Premium Plus. So you're not yet a part of Premium Plus, guys. What are you doing? $30 a month, absolute value. You get access to copy trades, signals, academy, education, etc. And if you're part of copy trade, part of Premium Plus, please also do remember the golden nugget is coming back into formation. So if you're part of Premium Plus, go into your classroom area and go and look for the golden nugget, right? Very, very cool stuff. And that is coming back into formation. You definitely want to get your hands on that. Now, tomorrow, in terms of the week, tomorrow is again going to be another bunch of volatility, another bunch of news that we're going to need to navigate. But honestly speaking, in my personal opinion, once again, should the Fed give an indication that there is going to be a rate cut, I think that is going to dwarf everything else that's in the calendar for this week, right? So again, we're not looking to trade a maybe. We're looking to trade if certain things come into place, if certain things come into alignment, if the perfect storm presents itself, meaning we get that indication from Powell, he is dovish, the markets respond accordingly. This will put us in long-term bull trades, regardless of any of the fundamentals that are coming out. And I believe we can hold some really, really big long-term trades, and we can scalp in between and have a little bit of fun. So there's a lot happening in the markets. Now, again, myself and the team, our focus is currently still in copy trade. From, I would say, next week, even potentially the start of April, our normal routine will get back into place, right? Our shows, our broadcasts, all these other fun things, those will get back into balance. For now, we want to make sure that our copy trade leads every other copy trade in the world right now. And that's our major goal. So double-digit increases, ROIs, month on month without fail. That is our main goal right now. So outside of that, guys, listen, we appreciate you. Be safe and trade safe. Please just remember there are these fundamental data events. So if you're unsure and you're trading on yourself or by yourself, please just be a little bit more cautious. Whatever risk you were using, maybe just reduce that risk, right? Because there can be volatility. As we know, in the world we're living in, anything can happen. So practice safe trading. It's far better to live to trade another day than revenge trade or get stopped out for a silly reason, right? So other than that, listen, we appreciate you. I can see everybody in the chat. I know a lot of people are going to watch this after the fact. It's a weird time. It's the only time I could fit in between meetings and all these other things. But we appreciate, we love you. We have not forgotten about you. Live broadcasts will continue. We're just focusing on making sure all the other groundwork to our amazing services are absolutely solid. So appreciate you, love you, and we'll see you soon. Goodbye.